Okay, good morning, everyone. I hope you can hear us well.
Good morning. This is Roland Jud speaking. I can hear you.
Very good. Good morning, Roland. We're just giving a few moments that everybody is on the call.
Good.
Okay, we are starting now. My name is Mirjana Vojtel from the CFA Society Switzerland. And this is the conference call with the subject company of this year's CFA Institute Research Challenge in Switzerland and Liechtenstein. With me today are Olivier Müller, our University Relations Chair, and Roland Jud, Chief Financial Officer at u-blox. Roland will shortly start answering questions you have sent to us previously. But before he starts, I would like to go through a few technical details with you. Number one, this call is recorded and will be available to you at the latest tomorrow. Number two, you all are on mute now. So please remain on mute during the call, as if you unmute yourself, that may create some background noise and then jeopardize the quality of the call and the recording. And number three, if you have any further questions for Roland Jud, you can type them in the chat session. And if time allows, at the end of the call, Roland will answer your questions. So without any further ado, I give a word to Roland. Roland?
Yes, good morning, everybody. Welcome. I'm very glad to answer now your questions. I will first read the question and then give you the answer on it as far as I get an answer for your question as such. Question number one, what are your market shares in the following segments: cellular technology, short-range technology, and positioning technology? If we speak about markets, we have always to keep in mind that we do not include any cell phone markets where the big semiconductors are present and dominant there. So we are speaking more about the more professional market without cell phones. From a market share point of view, the three technologies are very different. Positioning technology, this is where we are coming from. There we have a market share which is clearly above 50%, so we are the dominant company in this market. On cellular technology, our market share, we are about number 4 or 5. We have a market share in the mid one-digit area. And the short-range market is for sure the biggest one, but also the most fragmented one. There are nearly no dominant players in there. Most of them are concentrating on specific application and use cases. And also here, u-blox is here one of them who are more global and also in different applications existing, but the market share as such is very low here. Second question, what is the best way to think about R&D spending moving forward? For sure, R&D, we have grown in the past 5 or 10 years quite a lot. And this growth will not go on at that pace as in the past, but we will still have slightly growth also on R&D spending. I come to that also with the next question. How important is the high capex for the competitiveness of u-blox, and how high do you expect the capex to change over the next years? As I said, the main capex of u-blox is investments into new products, hours of our engineers. So, and it's visible in R&D capitalization. So it's what u-blox builds, and u-blox as a company is built on innovation. So this is the most important factor of our company, and so we also depend on additional R&D growth on one hand, and this is also what makes us competitive. Question number 4. With such a broad portfolio of 6,900 customers, how does u-blox manage to provide each customer with a customized solution and support throughout the product life cycle? Of course, we have nearly 7,000 customers, but you have to keep in mind that we do not make any customized products. So our products are all off the shelf, so no specific for a certain customer. So the question how we manage to provide each customer with a customized product is not relevant, because they take an off-the-shelf product. Nevertheless, we support our customers in the design-in, help them with what product of the roughly 300 different variants we have is best for their use case. But this is done through sales and through our field application engineers before sales and not after sales. When the design is done, changes are very seldom, and the customer does not need support to produce the product. They will need support maybe for improvement for the next variant of products they bring out. Then question number 5, what is the business purpose of Sapcorda joint venture? It is merely a project aimed at conducting collective R&D, or has it been set up in order to generate profits at some point in the future? If so, what is the expected to turn profitable? Of course, also, as in all businesses, Sapcorda is meant to make profits once. So we built this joint venture together with our partners that it will become profitable at one point in time. But the background for this and why we built Sapcorda is not because of the profit, but to have an independent provider of correction data. And correction data is needed for high precision positioning. And today, these correction data providers are already there, but they are all linked to, in some way, to product companies who provide then high precision products. And the 4 partners wants to have an independent offer, so that, for example, Bosch, one of the partners, if they needed high precision product for autonomous driving, for example, they do not want to be dependent on the correction data provider and then need also to take a specific receiver to do that. So this is the use case of Sapcorda. When it turns profitable, of course, this I cannot answer today. Not because we have no plans, it's because it's confidential. Question number 6, about the supply chain of u-blox. Where are the suppliers located worldwide, and how much in percentage u-blox depends on the biggest suppliers? Yes, they are spread around the world, so our suppliers are the big ones in the industry. So all are number 1, 2, or 3 in their area. For the wafers, we have TSMC and Global Foundries. These are number 1 and 2. These are the only ones which make wafers for us. So in this case, it's 100% from u-blox point of view. Then for packaging, we have Amcor. The fab is on the Philippines, but Amcor is number two as well, and from packaging companies worldwide. And then Flextronics puts together as contract manufacturer our modules, which again is on the among the first 3 or 4 of the contract manufacturing world. So we are depending on these suppliers, of course, because we are a fabless company and do not produce ourselves. But as being as these suppliers are the biggest ones we have in the world, there is not a problem that they could not produce or support us sufficiently for our future growth. Question number 7. How do you plan to cope with increased competition, lowering prices and standardization of the products in the cellular and short range segments? There is only one way to do it, by innovation. So you have to constantly develop further your product so that you could add functionalities or reduce the costs so that you keep your margins, and also that you enlarge your volumes, which also lowers the price and for yourself, which you pay to yours, u-blox pays to his suppliers, and with that you work against the lowering prices and standardization of the products in cellular and short range segment. Question number 8. Do you think there is a possibility of u-blox being targeted in a takeover? If yes, how likely do you think this is, and would shareholders be willing to sell? You as a company, you can never be sure that you are not being targeted in a takeover. So this is normal as listed company, and for all listed company through, has nothing special to do with u-blox. Also the shareholders, my perception is it depends on price. So there is always a price when a shareholder will sell it. The question is only how much this will be, and this is a question which I cannot answer as such. For u-blox, I think a takeover must make industrially sense, and until today we have not seen any company approaching u-blox where it makes industrial sense, though I don't think that there is really u-blox is really a target for a takeover today. Question number 9. Could you provide us guidance for 2020 revenues, EBITDA and EBIT margin, and CapEx in percentage of net sales? I have to say sorry, you have to wait until March when we come out with our guidance, so that is the point in time when we provide guidance for the next year, and I cannot give you here any answer on this question. Question number 10. What is the revenue and cost split in the 3 product types, short range, cellular and positioning? Yeah, for confidentiality reasons, we do not disclose this split. I have to say sorry, but I can give you at least a hint for your models. Positioning is or was in the past the dominant part. Cellular is increasing a lot due to the fact that also a cellular product is 3 to 5 times as expensive as a positioning product. Short range is the smallest part of our revenues, and but also there we have quite a good growth opportunity in the future. Question 11. How the u-blox management states its priorities with respect to external and internal growth of the company, geography of sales and product types. We run every half-year roadmap reviews where we allocate our resources to the different projects, and at the end to the different developed products for the future. And this allocation is done with market input and according to market needs, what needs to be ready when we allocate the resources, and also set our priorities to what we develop for the future. So regarding product types, and you could say it depends what we see, the feedback from the market we use to determine what we do first and what we do where we put less pressure on it. Regarding geographies, we are present in all 3 market areas, so Europe, Americas and Asia Pacific region, and we have the same level of efforts we put in each of these 3 areas. It's also, if we look where the business is created today, it's split 1/3 for each area of our revenues where we make it. So we have no specific area which we put special attention on it. Of course, there are big countries around like China, which is very important, and of course we have a certain give a certain attention to China as well, and set also certain geography priority there. But we must grow globally. All our customers are global, so we must look in all areas to stay in the market as such. And regarding internal and external growth, we want to grow internally more, but we have always an eye on M&A, and in this case also what happens in the market. And if there are opportunities which are also financially feasible, we might do it. But it's for sure not the first priority to grow only externally. Question number 12. Based on which factors or criteria do you determine your current peers, and do the competitors and u-blox together represent the market in order to define the market share? Here we have to make the split in the 3 product centers or product types we have. For positioning, where we have over 50% market share, there is no big competitor around anymore. So there are mainly local module makers in this area, mainly coming from China. So their u-blox represents the market quite good when u-blox is present. If we look at cellular, we have to keep in mind our bigger competitors, Telit, Gemalto, Sierra Wireless and Quectel, which represents together with u-blox the market where they are and could be taken, what kind of market share we have. And as I said, in short range, this market is very fragmented, the biggest one, and therefore also difficult to say what market share a company really has, because competitors are mainly dominant in very specific areas, and there you could say, okay, this is a specific application case where this competitor is present and might have a market share of 70–80%, and this changes at the end, but this is not representing what is u-blox market share, because u-blox tries to be more present in different application cases and different areas of market. Question number 13. Which indices or figures are you observing in order to analyze and determine the market growth and the growth of u-blox itself? So to determine our own growth, we determine it compared to the prior year or to the past figure to say, okay, that's our growth. Market growth, we take the ABI reports and the reports which are available about the market to see which are promising markets from where we should go into. But we have also to keep in mind, if you get a market report today, the products we will sell in these markets are developed now. So you must always look forward if you want to change something. To develop a product is 3 to 5 years time. So not so easy to take it out of some indices or so. You have to look in these ABI reports and say, okay, where are the most promising areas also, especially in the future, and where do you are already, so you put more effort in R&D also for future products, or which are the areas where u-blox likes to go into. Question 14. Have u-blox been approached by a private equity firm interested in acquiring u-blox? Sorry, I cannot comment on this. As a public company, if this would be the case, we have to make it public, and yes. Which product between positioning, seller, and short change do you expect will be able to better capture the megatrends and therefore grow faster? And how will this affect the gross margins? From a megatrend point of view, all three products are very important. At the end, in all these megatrends, you need to answer questions like what, where, and when. So where is the positioning technology? What is communicating, and when is, let's say, timing, also based on positioning. So you have all three areas: cellular communication, short range communication, and positioning, which are similarly important. From a u-blox point of view, the growth, of course, will be bigger in cellular than short range, and not that high in positioning. But this is not because positioning markets do not grow. Similarly, it's just because u-blox already have the bigger market share in these markets. But also there is quite sufficient growth ahead. If you just think on autonomous driving and autonomous vehicles, where the high precision is as products needed, and u-blox is very present. What is your total addressable market with respect to your guidance and your expectation in terms of revenues for the upcoming years? As I said, our guidance will be given mid of March for the next year. On the midterm, you can find the guidance in the presentations we just made at our Capital Markets Day. They are available on our website. 700 to 800 million revenue we guided for in 4 years time. That's our midterm target, and with that this is what we expect to come. Of course, there is not the 400 million we have today, and then in 2023 a jump to 700. This is a continuous growth. This growth figure implies a growth of roughly 15% per year for the next 4 years. Question number 17. You have a negative cash flow in 2018, but this is primarily due to the capex and intangible assets. How do you capitalize R&D in intangibles? And how much of the intangible capex is due to cash outflow from acquisitions of new intangibles and the amount that has already been incorporated in R&D and its projections. So regarding negative cash flow 2018 is right. It was negative, but it's not negative, or not only negative because of capex and intangible assets, it's also negative because of net working capital changes. Due to some constraints in the supply chain on material, you have longer lead times for certain specific components you need for chip development, for chips and modules. We have increased, for example, our inventory to be in the future also capable to serve our customers' demands on 3 to 4 months lead time, although some components have a lead time of 1 year. So, and this of course has an effect on cash flows, as it's a cash out, it's a cash bound in inventories. Thanks to the fact that we have not customized products, that we have so-called off-the-shelf product, the risk of obsolete material is rather low within u-blox, and this gives us confidence that this cash is not lost, but only bound in inventories today. Regarding R&D capitalization, we do that according to the rules of IFRS. So in all these 250 projects we have are split it into different stages of product life cycles. We call this gates from 0 to 11. 0 is, or gate 1 is first ideas, gate 11 is end of life. But in between between gate 2 of a project and gate 7, it is capitalized. Now, what is gate 2? Gate 2 is at the point in time when you know that a product is technically feasible to be developed. It's also made from a financial point of view sense, so that you have a business plan that shows you that net present value of the whole product development and sales return results in a positive net present value, or in that you have a positive payback from this development. And at this point in time, you start capitalizing all costs. Before that, you expense it, and you do capitalize costs in R&D and R&D efforts until gate 7. This is initial production. That means you have now finished your product development. The product is available for sale. So sales can start to sell the product. This does not mean that the product is really final. It just means you can produce it at our contract manufacturers and you can use the product. After gate 7, where the costs are then expensed, you could have, for example, on cellular side, certifications on network at operators in the different areas. So you have not certified your product in all areas. For example, it's only certified for Europe, but not at all American network operators. And this needs to be done still, but you can sell the product. So, and between that, you capitalize. With that, we have in 2018 54 million capitalized R&D. So the capitalization rate is on average 45% of our R&D efforts. Cash outflow for acquisition of new intangibles. Yes, you have that, but this depends more on development, because you need also some IP for external IP for your product development and for your product itself, which is built in. And for those, you have different way of paying it. Some you pay a royalty in the future, for others you buy it and have then an intangible which you use for development. But at the end, this intangible goes also into the capitalized R&D or into the product and is written off according to the product life cycle. So new intangible from acquisitions, as such, if you acquire companies and or acquire like we did in the past Ricardo, and acquire a team in an asset deal, this is not incorporated in our future outlooks always. We always make this without any acquisitions, because it's very difficult to answer, to say if and when and what you really acquire, and therefore this is just an adder to a guidance, or would be change the guidance if it really happens. Now question 18. Since your product lifetime is quite long and this impacts directly the R&D expenses, what do you expect in terms of efficiency and innovation for your upcoming products? The product life cycle as such has not a direct impact on our R&D expenses. It has an impact as the product life cycle. A long product life cycle means also a long time when cash flow comes back, and of course this makes at the end it possible to invest more into a future product than if the product life cycle is very short. But at the end, to determine what we invest into R&D is mainly done by the capability what we earn. So the main KPI is free cash flow. So what do we want to have as free cash flow? This gives us the aim what we can spend. At the end, the goal is not to spend more than we earn. So with that, we stay independent from financial community as such, so that we just need money to develop future products, so we are able to develop our products with the money we earn from our revenues. And this is the major goal where we did it. And of course, we always try to improve our efficiency, and we also have more ideas than we could afford. So it is not a problem that we do not know what we can do with the money. It's more a problem that we have more ideas than we can afford through our incoming cash flows. So, and now the last question on my list. What aspect of the business is giving you the most trouble now? The most trouble and the most difficult trouble today gives for sure negative mood in the economy. All you have created by Donald Trump and China and their war in between. Uncertainty is poison for economy, and also for us makes it very difficult to predict what comes when. It could lead to the fact that some customers push out their plans. For luck, they do not cancel them, so they do not give up to the development. This is not really the problem what the uncertainty causes, but it creates uncertainty when it happens. And thanks to the fact that we are quite financially stable, this helps to survive in this environment and not becoming dependent on external financial companies with other agendas than the one we have. Okay, that's.
Thank you very much, Roland, for all your answers. Thank you very much, dear students, for the questions you submitted in advance. I think we already have the first learning from all those questions, which is that the company is not able or not willing to answer to all of them, as some answers would, of course, constitute material non-public information that Roland would, if disclosed by accident, make immediately public to the entire market. With that, I would like to suggest that we go through the questions that just came in, right? We propose to still stay on mute, and I will read them simply for the quality of the call. So the first question comes from Robin Schaffner, right? u-blox states that 10% of your major customers represent about 30% of your revenues. To which extent are they related to the different segment, positioning, cellular, and short range?
Okay. They are similarly split, mainly positioning and cellular customers. As I said already, we do not disclose the exact amount of the split of our business, but more and more you have also projects where you need more than one technology. For example, if you think of an asset tracker, then you need, of course, positioning to know where the asset is, but usually you need also something to communicate the tracker with the cloud or with a certain service within. And so there you need at least a cellular or short-range connectivity as well. What we have to keep in mind about this number of major customers, this major customer number is not a stable figure. That means you could have a customer among these 10 big ones in 1 year, and in the next year it's only one of the 100 which represents 80% of the revenue or even less. Just because it's a project business. And you could imagine if you, for example, if our customer gets a contract with a, let's say, container company to equip its containers with a tracking solution, then they have a ramp up, and in the first year where they equip the bases, and then this project goes down to a maintenance phase where the replacement and the new ones are added, but this is in much lower volumes than today. And of course, if this customer is not capable to do another big project, he falls out of this 10%.
Thank you very much. The second question comes from Jayant, asking the following. The annual report states that revenues and expenses are naturally hedged as they are in dollar. How are salaries paid? Question mark. How do you hedge against foreign exchange risks?
Okay, the naturally hedging is statement is meant against gross profit. So we have 65% of our revenues in US dollars and 15 in roughly in euros, and we also have our direct attributable cost to revenues, so COGS, in the similar way in dollars and euros. So below, of course, we pay the salary in the currency of the country where the employee is. So in Switzerland, you get Swiss francs. In Europe, you get euros. In the US, US dollars. And in China, you get renminbi. They get renminbi and are paid in this area. You can find on our guidance an impact what it has foreign currency change of 10% onto EBIT. And you see there on euro, it's still natural hedge. So the 15% euros coming from revenues are sufficient to cover the costs which occur in euros. We do no hedging today against foreign exchange risks, really, because major costs also below in the business are in US dollars, major revenues are in US dollars. And as long as you have not a very volatile currency movement up and down, it does not make any profit for the company to hedge it, because all hedges are limited on time, and the bank for sure earns money, but you maybe not, because at the end you have the dollars and will spend the dollars at the end again in dollars.
The next question comes from Simone. Where do you see the most of the R&D expenses in the next year? Positioning, cellular, or short range? Question mark.
I see it quite equally balanced what R&D expenses goes into. In the last 2 or 3 years, cellular and short range were more dominant, because we started there to develop an own chipset, and this development has taken more efforts than to do just the next generation in positioning chipsets. But these chips, our initial chip developments, are done until end of next year so far. So we will bring out the first Cat1 chipset on cellular. We also bring out the V2X chip on short range, and so this goes again more into a balance over the next years.
Thank you. The next question comes from Anati Monina, and it asks the following: what % of u-blox manufacturing is in China and to destination of the US? What is the u-blox approach for mitigating the effect, i.e. to satisfy US clients directly?
Okay, we have no manufacturing in China as such, or nearly no manufacturing in China, and no manufacturing in China to destination of the US at all. So our contract manufacturer of electronics is in Austria, in Althofen. Chips are made in Taiwan and with TSMC, or Global Foundries, which has its headquarters in Singapore, but the wafer fab is in Germany. And as I said, Amcor is based as a fab in the Philippines.
Thank you. And then the second part of the question, right? And it's typical for analysts that they put several questions into one, but we separate them on purpose. u-blox has obligations to pay off in 2021 and 2023, both 60 million Swiss francs. Based on which investments would the cash to cover these obligations come from?
The cash for this obligation, to cover this obligation, will come from the business, so from the operating cash flow. So it's not a specific investment. You could say we have not taken up the 60 million or the 120, in fact, for a specific acquisition or a specific investment. We've taken it as a cash reserve in case we will have in the future need money in the future to acquire something, because usually if you have to look after money, it's rather difficult to find it in a short time, and acquisitions in the area of technologies usually are long lasting. Nothing happens, but when it starts, it's immediately within 1 or 2 months all is done. So, and this was the basis for why we took up these two bonds, and of course, as long as we have not spent it yet, it's still the cash is on the balance sheet today. So we can repay it from the cash as such, or we can also say it has to be paid by the operations.
Thank you. The next question, and that's actually again a 2-in-1 question. So we'll start with the first leg, which comes from Tim Holt. What are the products that u-blox currently has in the R&D pipeline?
The products in the R&D pipeline, let's say we have around six chip platforms, or 6 platforms in the R&D pipeline today. Different products ranging from positioning, u-blox 9 high precision, safety products, down to cellular category 1 Cat-M chipsets, 2V2X chipsets, and corresponding modules to all these products.
And the second leg of the question is, what percentage of R&D spending are fixed costs?
Depends what you define as fixed costs. Nearly all, because the major R&D spending is personnel. Of course, within 3 months you could lay off people, but then you do not only lay off people, you also lay off know-how and knowledge. So in this area, I would say most of the R&D spendings are fixed. It's not so variable, for sure not variable on revenues.
Thank you. The next question comes from Tommaso Masazza. What sort of sales have you been from your V2X products?
From V2X products, today there is not a lot of sales in it, because the V2X business is just starting right now. The chipset as such is not finished yet. So this will be ready by end of 2020 somewhere, and V2X is mainly used in autonomous vehicles, which are also not on the road today.
Then the next questions come from Daniel Dahan. What are underlying reasons for finance costs to skyrocket in H1 2019?
Yeah, you have in the finance cost, you have 3 components of 19. One is the foreign currency gains or losses. One is the interest for the bond. And one are the losses from our joint venture Subcorda, which is equity accounted and therefore goes also into finance costs. So now in 2019, there were negative or finance costs or expenses as are the losses from Subcorda and the bond interest, and you have the effect of the positive effect or no effect of foreign currencies, which you had in the past. You have some positive effect from currencies which level out this figure a little bit, and there you have a higher number now in 19 than before. And secondly, depends what you compare. You have also an effect of the changes in accounting principles, IFRS 16. This effect is not that big, but you have where you put rent to offices or rent agreements, and you have to capitalize further, so you could not put the rent into expenses as such, but you have to split it up into depreciation and finance income, like you do with financial leases. And with that, you have a certain effect that you have some finance costs for these leases, or some movements from rent expense down to finance cost as well.
Glad to see that there are many interesting costs, so that proves that that u-blox is definitely an interesting company for our challenge. Here comes the next from Malik Lechebkab. Are masks and other tooling costs capitalized in R&D or in PP&D? Where does the amortization go?
Tooling costs are capitalized along with the capitalized R&D costs with the development, because they are part of the development of the products. So they are capitalized in capitalized R&D and amortized then over a 3 to 5 years time period in the future with these capitalized R&D costs.
Next question comes from David Copini. What commands can you give us in terms of past due receivables that skyrocketed, bracket open, around 20 million of past due receivables in 2018?
Yeah, the past due receivables, this is, or it's not past due receivables, it's more the trade receivables increased in 2018, which is a cash outflow, or not cash inflow, so to say, just because we had quite a good month in December. And with this month in December, of course, we sell a lot, made a lot of revenue in December, but there's not paid. They weren't paid in January, February. So you have this move up of trade receivables. And I wouldn't say that's past due. It's just a fact that when does the revenue occurs during a year, if it's going close, the closer it gets to end of a period, the higher trade receivables you have.
The next question comes from Sidita Haza. Could you please explain why u-blox keeps more than 25% of assets in cash? For instance, do you have any acquisition or merger plans? If not, do you consider the probability of a downturn in the near future?
As I said, we have raised a bond, or issued about 2 bonds which run out in 21 and 23, and based on that we have not spent them yet. So as they were planned as, let's say, as cash reserve in case we need it for an acquisition. I cannot comment on any acquisition merger planned, as I said, because I have to announce that immediately if I would do so, if there is any. But as such, as long as we do not have these acquisitions, we will have this higher cash amount. Of course, it helps if there would be a downturn in the future, because then we have cash available also to finance our operations, but this is not the intention.
Then we have a next question which comes from AIM Research. What dividend payout do you target?
The payout of dividend is a topic of the board of directors, and the board of directors announced the dividend payment once a year, or decides on dividends paid to be paid beginning of the year. We also released that again with our year-end figures. Overall, until now, the board has the target to pay 1/3 of net profit as dividend. And I have not heard till today that this changes, so you could take that in as an assumption.
Then next question comes from Robin Schaffner, right? What do you expect to do with your cash? Why did you borrow 120K?
Yeah, as I said, we borrow it as a reserve to be able to react in case there is an acquisition or interesting opportunity for one of these in our development or product centers we have. And for that you need to be reactive, and you need to have the money in advance on the first hand, and the second hand, of course, the bond rate with 1.375 or respectively 1.625% interest rate is very attractive, and not that big amount of money, so that you could have borrow this 120K in advance instead of doing it at the point in time when you really need it.
And then we again have a two-leg question, right? What account receivables are increasing in Americas in 2018 fiscal year?
I have difficulties to find where you saw this number, because it's not closed as such.
Okay, very clear. Thank you. Then we have the next question from the University of Fribourg. Do you know if your future prices per product are going to increase, decrease, or stay stable?
We expect there is an average sales price decline of 10% in the market. So this said, our product future prices per product might decrease. Of course, this is very important. The price per product is not stable or not equal in each product line, and also not within a product group. There are quite big price differences. So the mix of product is very important if we took our price look at product prices on average. And in the past we managed quite good in sometimes to keep the prices stable, although the market has a price decline by 10%, just due to we were capable to sell more products in the area where we have higher prices than in areas where the prices as such are lower.
So we are approaching the hour, right? Let's wrap up with the last question. From our point of view, u-blox has a higher cost of goods sold in comparisons to the peers. Does u-blox have a plan to buy a production company to reduce the production costs? That is a question that comes from Severin Scheivil.
Yes, you might be right if you take just the COGS, which peers shows in their numbers and ours, but we have to be very careful what COGS are and how COGS are defined. It's not for all companies the same. I can make an example. Telit, for example, does all the IPR costs which occur in cellular on a first in the first instance, and are around 10% of revenues below to marketing and sales costs. We have these costs on COX. So the comparison is not always correct if you do that. You have to be very careful if you go into that and look what is calculated into COX and what is not in the COX. To reduce production costs, you can be sure that if you buy a production company, you increase your production costs, because you're then not dependent on the product or on the technology you are in. Let's make an example. If you want to have an own wafer fab, this will cost you between 5 and 6 billion. That's what the wafer fab costs. And if you buy a company, you could imagine this is for sure the value you have to pay for. But then you are locked in to a certain technology. Let's assume you buy one with 28 nanometers and you now want to move to 16, you build a new fab. So you will be never in such a high revenue and turnover to amortize the costs for these wafer fab if you do not have others really contributing and using your production company as well. And with that, it's also a problem if you must have your competitors using your production company. They will for sure won't do that, because they won't be sure that their IP remains confidential, and they have this only if the production company is independent from each and one of the industry. That's also why TSMC global foundries are only doing wafers. They do not sell any piece of silicon as such. They also do not develop any piece of silicon. Their competence is making wafers, and the know-how comes how to do silicon and how silicon runs comes from the companies like u-blox, but also the big ones like Qualcomm are, for example, at TSMC.
All right, thank you very much. All right, we would like to thank Roland Jud for all your in-depth answers as far as you could, of course. Right, we would like to answer to all thanks to all students for all the interesting questions. Because before Miriam and I close the call, right, let me add a couple of remarks for the students. Right, for all your work on u-blox, please include the content of the Capital Market Days. This already applies for the December presentations. Within the next few hours, after we get the okay from Roland and his team, you will get the recording and the questions, both those you handed in before and those you put into the chat. For the students, the next kind of formal deadline is January the 6th, midnight Central European time, at which time we expect for the best team per university the report in 2 copies, one anonymous and one with their name. The first, of course, will be used for grading purposes. With that, we would like to close the call. Thank you very much for attending, for the questions, for the answers, and we wish you a very nice day. Goodbye.
Bye-bye.
Thank you.
Now quickly.